Good morning, uncle.
Hi Sunil, how are you?
Fine, fine, uncle.
Can you switch on your camera?
Yes, sir.
Okay, fine. So Sunil, if you have any doubts, you can ask your doubt first, and then we'll start.
No, uncle, no doubts as far, uncle. You
Okay,
explained me everything yesterday.
fine. Okay, 1 second. Let me share my screen. So can you brief me what all things you know so that I can start accordingly?
Okay, uncle, first, I know what is technical analysis and fundamental analysis. Not fully. I
Hmm.
just saw a video of 45 minutes and that's all, but I'm not really confident about those topics. Only I know how to this one. Then price action theory, that one, I just wrote down that one, uncle. Price action theory, and then yeah, strategy, trend trading inside bar, and then retracements, and
Hmm.
then those reversible, then breakouts and breakdowns. How to find those? Then what kind of trends are there? That higher low, higher high, and lower low, lower high.
Hmm.
Those and market structure and graph. Then demand and supply. That one.
Okay. So first of all, do you have the idea about the market structure? Do you know how the market structure looks like?
No, uncle. I have really no. I don't know the idea, uncle.
Okay, so let's start with that first, market structure, fine, and then we'll continue after that. Okay.
Okay.
Second. So you know about exchanges, primary market, secondary market, these things you know.
I've just gone through, uncle, but in depth, I don't know that much.
So we'll start with that.
Okay.
So we have two types of market in India, right? Primary market and secondary market. Okay. So primary market, any idea about primary market? What is that?
Like, first time when the company is going IPO.
Right. So
Like
first
first
time,
time.
uh, so so whenever a company needs money, right? They may need to expand their business, or they may need to clear their debt, or for any purpose. If they need that money, then they will come up with an IPO. Okay, so that's all will happen in primary market. So as you know that there are certain IPOs which are currently on, right? HDB Financial Services, Kalpataru, and so many are there, right? So right now they are in primary market. So once they get listed, then they will be listed in secondary market, right? So in primary market, there is a limit to every stock, right? Some stocks may have a limit of 15,000.
Yes,
That
yes.
like it happens in lot size, right? And some IPOs will be SME, small and medium enterprises. So they may have a higher lot size. Maybe in one lot they will charge around 1 lakh rupees, right? So there are certain IPOs with respect to SME as well, right? So this is
Yeah.
how they will plan in primary market to because they need some kind of money to expand their business or something like that, right? So once they get listed, they will list in secondary market, and once they list in secondary market, at that time we don't need to buy in lots and all, right? We can buy as per our requirements, or whatever money we have, based on that we can buy in secondary market, right? So this is the basic concept of primary and secondary market. Okay. And then we have exchanges, right? So we have two exchanges, NSE and BSE. So this you know, right?
Yes, uncle. This one.
So you can trade whether in BSE or NSE. It's up to you. There's not much difference in that. Only sometimes there will be a difference of zero point 0.5 paisa or 1 rupee, something like that, right? But anyway, it depends on you which exchange you want to trade. I normally trade in NSE. I use NSE for trading. Okay, and then Demat account you already know, and so you know about the prices: open price, high price, low price, and close price.
In that candle, uncle, that open shadow and then big those one, uncle.
Yeah, there are four prices actually. On each candle, there will be four prices: open price, high price, low price, and close price. Whether the candle is of 1 minute, 5 minutes, or 10 minutes, whatever it is, the four prices will always be there. Okay. And apart from that, there's a thing called volume. Okay. So, any idea about what is the volume?
Like, Not that much, uncle. The number of transactions which has been taken
Uh,
place.
because see, we have in market there are two types of traders, right? Buyers or sellers. Right? So the volume is a mix of both buyers and sellers. We cannot segregate whether they are the buyers or the sellers from the volume. But if we see the candle, then we can take a bet whether they are buyers or sellers. If the candle is green, right, then we can see that mostly are the buyers, and if the candle is red, then we can see that most of the traders are sellers, right? Based on the candle we can decide the which is a buyer and which is a seller. Okay, and then we have bid and offer. Any idea about bid and offer?
When the seller he's selling when in case if this is stock when I'm selling a stock, so I'll put a particular price so that which I'm bidding for.
So bid is basically a price at which buyers are interested to buy, and offer is the price at which the sellers are interested to sell, right? So these things, I'll show you where you can see this. One second. If you go to NSE India, have you seen this site earlier? NSEindia.com, NSEindia.com. You know.
Yes, yes, uncle, I think.
So here, let's say I want to see the bid and offer for HDFC Bank. Okay, I'll click on that, and then here I can see this is called order book. Okay, so this is order book, right? So here you can see the bid and ask. Earlier they used to call it offer, now they are calling it as ask. Okay, so they've changed the name ask. So this is a bid, this is the ask. So this is the price at which buyers are interested to buy, and this is the price at which sellers are interested to sell. Okay, so whenever there is a match in the prices, at that time the trade will happen. Okay, and these are the quantities. Here you can see that, right? And these are the total number of buying and selling quantities,
So
right?
like what are these, uncle? These are any particular indexes or stocks?
This is a stock, HDFC Bank.
Yes, 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 okay.
HDFC Bank, one second. HDFC Bank Limited, right?
Okay, okay.
So for any stock, if you want to see, you can just write the name of the stock here and then you can see, right? And even in Zerodha also you can see this, like in your Demat account. If you add the name of the stock in the watch list, you can go to market depth, and there you can see that this information. Okay, one second. Is the video recorded, right? Recording now.
Yes, yes, uncle.
Right. Okay, so this is clear the difference between bid and ask.
Yes, yes, uncle.
Okay, so apart from that, there are certain trade information also which is available here. Okay, the total number of traded volume, which is in lakhs, the traded value, total market cap, and the free float market cap. So, do you have any idea about what is the difference between market cap and free float market cap?
No, uncle, I don't
So,
have.
total market cap means total number of stocks, total number of equity shares. Okay, and the one free float market cap means the one which are there in the market. Like let's say they have a total stake of 100%, right? So let's say they have sent 90% to the market. So 90% we as a public can buy and sell, and 10% will remain with the promoters.
It's been
Promo-
shareholders in existence.
Promoters or the board of directors or the management, right? So they will have that 10% and remaining 90% will be there in the markets, so that normal public or normal traders like us can buy and sell, right? So this is called as free
Okay.
market cap. Okay. And then we have 52-week high and 52-week low. So these two prices are very important in stock market. 52-week high and 52-week low. 52-week high means 1 year high, because in 1 year there are 52 weeks. So
Yes.
52-week high means 1 year high, and 52-week low means 1 year low. Okay, fine. So here,
Just 1 minute, uncle.
uh,
Come.
okay.
Yes, Uncle, I'm back.
Okay, 1 second. Let me put my laptop on charger. Take 1 second. Okay, so 52-week high and 52-week low, these prices are very important. So these I will explain you while we will discuss about the strategies later, right? How to use
Okay,
these
Uncle.
strategies, okay. And then we have upper band and lower band, means the stock can go maximum to this price in a single day, and this is a price at which it can go towards the downside in a single day. So this is a band they have decided. So for some stocks, the band will be plus or minus 5. For some stocks, it will be 10 plus minus 10%, and for some stocks, it can be plus minus 20%. And the stocks which are B grade stocks or C grade stocks, for them, the band will be like plus minus 2%. Right? So band means the maximum price it can move and towards the upside, or the maximum price it can move towards the downside. Right? Okay, it's clear.
Yes, sir. Yeah.
So tick size means the stock can move in a multiple of 10 paisa. Right? Like if the price is 2000, then it can go to 2000, point 1, point 2, point 3, like that. It will not go like 0.05 or 0.15 or 0.25, like that. It will not go. It will move like point 0.1, point 0.2, point 0.3, point 0.4, like that. Okay. So that means tick size. Okay. Find this clear?
Yes, sir.
Okay. We'll move back to slides. So next is we have two types of market, bull market and bear market. Actually, three types of market: bull market, bear market, and sideways market. So, do you have any idea about these three types of market: bull, bear, and sideways?
Like this one, sideways, I'm not sure, Uncle. Whale market is also called as. Is it also called as whale market? Because like bull market means it has high potential, bear market means it has less potential, and whale market means it goes sideways. The price goes sideways, neither up or neither down.
Yes. The bull market basically means uptrend, bear market means downtrend, and sideways means flat consolidation, right?
Yes,
So
sir.
in sideways, any stock or market can form a range, and it will start moving in that range. So there is no fixed time period for what time the market can go in sideways. But these days, for around 3 4 years, we are seeing that 6 months is normally a bull market. Okay, the period is 6 months is the bull market, 3 months is the bear market, and 3 months is the sideways market. This is what we are seeing for around 3 4 years. But if you go back way back in 2008 or 2007, at that time the bull market used to be only for 2 to 3 months, right? Earlier, but now it is approximately 6 months.
Okay, okay.
Okay. Okay. So this is fine. Why we want to invest? Because we want to start with small fund, high liquidity. We should always trade in high liquidity. So which type of stocks you are trading?
Only small cap stocks in this one, Uncle. Small cap stocks and large cap stocks.
Small cap and
Large cap.
large cap. Okay, fine. So if you have experience, you can choose even a small cap and mid cap stock also. It is up to you. But the one which is a beginner person in trading, he should start using with only the large cap and mid cap only. Small cap we should not touch because they are highly volatile.
Risky.
Risky, highly
Okay.
volatile, right? If a bear market starts, they can go up to minus 60% also. Right? So they are very volatile and risky. Okay. Mm. Any idea about FPO? FPO?
No, Uncle. No, no.
Follow on public offering, right? So this is being done by those companies which are already listed in secondary market. Okay. Like IPO is for the companies which are not listed in secondary market, right? FPO is for those companies which are already listed in secondary markets. Okay. So how it is different from IPO? So it is different from IPO, which is when a company offers its shares to the public for the first time, right? Then we call it as a follow-on public offering. Okay. Okay. So now instruments to trade. So any idea about how many instruments we have to trade in Indian stock market? So these are the ones, right?
Like,
In in stocks we have, I've just listed few of them like HDFC Bank, TCS, Reliance, SBI. And in the index we have Bank Nifty and Nifty 50, which are highly liquid. Apart from that, we have other indexes also like Sensex, right? And then mid cap, and then Fin Nifty. Okay. But these are the two which are highly liquid, right? And then we have currency like Forex. We have three pairs, uh, GBP versus INR, JPY versus INR, and USD versus INR. So here also you can trade, but these are traded only in FN, future options. Okay. Then we have commodity like gold, silver, crude oil, natural gas, right? These are the commodity which you can trade, but this is again available in FN, future options, right? And then we have ETFs like gold, silver, bank bean. ETF, any idea about what is the ETF?
I know, uncle, like, uh,
Yeah.
exchange traded fund.
Yes. So if you want to invest in Nifty 50, Bank Nifty or gold or silver, then you can go through ETF to invest, right? And then we have mutual funds. So any idea of what is a mutual fund?
Yes, and like, example like Parak Parak Mutual Fund, Axis Bank, and then
Mm.
Quant large cap and Quant mid cap. Those
Yes.
local mutual fund.
So any idea how they work? Like
Okay, like, there's a fund manager where we can do a lump sum and also an SIP or do an SWP. He's the one who takes care. And there's something called expense ratio, and it will be somewhere up between 2%, less than 2% or 0.5%.
mm. So see, mutual funds are having more expense ratio as compared to ETF. So if you want to invest, then it's better to go through ETF route. Mutual fund will be having more expense ratio like 1 to 2%, and ETF will be having like zero point 0.1 or zero point 0.2 like that. So they have a very less of expense ratio here. So if you have an option, you can go through ETF route like gold, silver, bank bean, Nifty bean. It's better to go in ETF. And if you want to invest in any other mutual fund like large cap funds or small cap like that, you can buy the mutual funds, right? So the fund manager indirectly invests in stocks only, correct? So while investing in mutual funds, you have to see the portfolio of that mutual fund where they are investing, like large cap, small cap, mid cap, or some kind of debt funds are they are investing, right? So all those things you have to see before you buy the mutual funds, right? Fine.
Yes, sir.
So these are the timings. 9:15 to 3:30 is for our stock market. Currency is from 9 to 5 p.m. and commodity is from 9 to 12 p.m. Okay. So there are many traders who trade only in currency, and there are many traders who trade only in commodity as well. Okay. Because they have a long time frame, right? So they want to trade starting from morning till night. Right. So how stocks are segregated? So these stocks are divided like types of stocks: large cap, mid cap, small cap, and penny stocks. So they are segregated based on the market capitalization, right? So how you calculate the market cap? You calculate the market cap stock price into number of shares. I have shown you that na free float of market cap, right? So those are the number of shares into stock price. So if you do this calculation, you will get the market capitalization. So for large cap, we consider is if it is greater than 20,000 crores, we call it as a large cap stock. If it is between 5,000 to 20,000 crores, we call it as a mid cap, and likewise small cap and penny stock, we have to segregate based on the capitalization, right? Right. So there's a normal rule. So this is like a normal rule of for a person how to invest. 50% it should go in large cap, 25% in mid cap, 15% in small cap, and 10% penny stock. So this is how you can invest. But if your risk appetite is more, you can change this percentage, right? Because large cap they are having low risk. Large cap is low risk. Mid cap is having the moderate one, and small cap and penny stocks are high risky. Similarly, they are high risky, but they will give you more returns also, right?
Yes, sir.
These are low risky and they will give you less return. So based on your risk appetite, you can change this percentage. But this is the ideal scenario. 50%, 25, 15, and 20. This is the ideal scenario. Okay. It's clear?
Yes, sir. Yeah.
Yeah. So dividend, any idea about dividends?
Yes, sir. Like dividends means the company's profit is being given to the shareholders.
Right. So there are many stocks which are giving dividend. You can also invest in dividend stocks, right? Okay. Now there is a weightage. So any idea about the weightage, how the stocks are weightage in Nifty 50 and Bank Nifty?
Not, no, uncle, I have no idea about that.
Okay. So see, Nifty 50 is is an index, right? So Nifty 50 is having a basket of stocks, right? So they have divided the certain weightage based on the market cap and based on the sales profit and all those things. So top is the Reliance Industries. So it is having around 10 to 11% of weightage in Nifty 50. Likewise, TCS, HDFC Bank, ICICI Bank. So these are the top 10 which are having the highest weightage in Nifty 50. Okay. Similarly, in Bank Nifty also there are certain stocks which are related to banks only and they are listed in Bank Nifty. So whenever these stocks move, likewise the index will also move. Okay. So the index is dependent on the stocks. So this is how there is a movement in index. Okay. Clear? Okay. Types of trading. So can you tell me the types of trading you know?
Like scalping means 30 to 40 minutes. Intraday trade means like you can buy and sell stocks within
Hmm.
a day where the margin will be 5.
Hmm.
Swing or positional trading means like within weeks or within days.
Right. So you can segregate into three categories: short, medium, and long term, right? Based on your thing, right? Short term maybe like 7 to 10 days, medium term like 1 to 3 months, and long term maybe like more than 3 months, right? And apart from that, there is a concept called investments. So these are basically for very, very long term, right? Like for 2 years, 3 years, 5 years, and 10 years, something like that. Okay. So now you have to decide first which one you are interested to do it. Based on that, you have to plan. Scalping, intraday, and this thing. Scalping basically is done by the traders which are having a huge capital, right? So they normally do
Yes, sir.
scalping because they have to exit within a time frame of 1 to 3 minutes maximum. They will stay in the trade and then they will exit. Either they have to book the profits or they have to book the losses, right? So they are very quick. And then intraday, like you have to enter and exit in the same day within the 9:15 to 3:30. Okay.
Retail investors, such as that.
Mm. So mostly I want you to focus on this part, positional, short term, medium term, and long term, right? I also maximum do this kind of trade. 70% I focus on swing only. Intraday is very less. Scalping is also very less. Like only 10% is scalping, 20% is intraday, and 70% I focus on swing and positional. Because this is the place wherein you can make a lot of money. Okay. But most of the retailers think that they can make maximum money here, but no, they are wrong. Actually, you can make the maximum money here, right? Because apart from technical, you need to understand your psychology also, right? So trading psychology has three things basically: hope, fear, and greed. Okay, so these three things a trader should not do it, right? You have to follow your charts, technicals, and make an entry and make an exit. Okay, fine, it's clear. Okay. So any idea about risk management?
Yes, uncle. Like risk management is like something like where like how much risk are we able to bear on that particular trade? Like how much money am I able to lose and how much money am I able to gain?
Hmm. Right.
That
So you
one.
have to
So
plan. You have to plan your before entering a trade. You have to plan your risk. How much risk you are willing to take. It's like you can take 1:1, 1:2, 1:3. So it depends on you. So best is I would say you can use 1:2 risk reward ratio. So this is the best which I feel. Okay. So one is the risk. 1 rupee is the risk, and 2 rupees is the
it's a
reward.
loss.
Reward. This is the reward. 2 rupees is the reward and 1 rupee is the risk means loss.
Okay.
Okay. So let's say you are planning based on your technicals, you have planned to take a profit of 10 rupees. Then your stop loss will be how much?
1:2.
5 rupees will be your risk and 10 rupees will be your profit, right? 1:2.
Okay,
Okay,
okay, uncle, understood.
fine. Understood now, 1:2, like
Yes,
5.
yes, yes, understood.
Okay, so if your profit is 20, then how much should be your loss?
So like 1 divided by 2 into 20.
20 is your profit. So what will be your risk or your stop loss here based on 1:2?
5, like 15.
10, 10, right?
Okay, uncle.
10 rupees. So you have to divide like that. 10, 20 divided by
So
10, then you will get 1/2, right? 1 divided by 2. Fine. So means 10 rupees loss you can take in that trade and 20 rupees profit you can take in that trade. Like this.
okay, uncle, understood.
Okay. So entry, target, stop loss, and trading stop loss. Any idea about trading stop loss?
No, no, uncle, I have no idea.
Okay. So some people, what they think is that they don't want to keep the stop loss. Let's say you make an entry at 100 rupees. Okay. And your target is, let's say, 120. So now the stock has moved to 1110 and your stop loss here was how much? 90, right? Because here I am taking a 20 rupees profit, so I should take a loss of 10 rupees. Okay. So now the stock has moved to 110. So what you can do is that you can trail your stop loss from 90 to 100 now. You can change your trail means change your stop losses, right?
Understood, understood.
And as soon as the stock moves to 120, then also you can trail your stop loss to 110. So like that
One to
you can keep trailing your stop losses, right? So no need to book targets or losses. You just keep on trailing the stop losses. Once it moves to 140, you can trail your stop loss to 120. So like that you can keep on doing it. So
as the
once it
stock price increases.
as the stock prices increases, you have to follow it this, right? So this way you won't lose your money also, and you will exit in profits. Let's say after 140 you have put the stop loss of 120. After that the stock has started coming down, then you have to exit at 120. So now you entered at 100 and you exited at 120, so you are in a profit of 20 rupees, right? So this is the benefit of trailing stop loss. You can keep trailing till the stop keeps on moving. You can keep trailing the stop losses. Okay, fine. So these parameters you have to follow when you plan your trades. Okay. Or there is one more way to plan the risk, like 1% or 2% or 3%, like that. Also, you can plan your profits and losses. Okay, so it is up to you how you want to plan, right? Okay. So money management, there is one concept I just want to explain you money management, how to do the money management, right? So let's say you have a capital of 1 lakh. So you should not use 100% capital in trades. Okay, so you should always use in form of baskets, right? So in 1 lakh capital maximum you should use 70K. 30,000 should always be in your demat account. So that if you want to add some more quantities or if you want to average it, for that purpose you should keep this amount in your demat account. And even in 70K, you have to decide a basket. You should not put 70K in one stock, right? So because your capital is less, so how you can plan? You can plan like 10K in one stock. Okay. So here you can make a basket of 7 stocks. So like that, you should do your money management. How to place your money in different stocks. You have to distribute your capital. You should not put all the capital in one stock, right? It's clear?
Yes, uncle, clear.
Okay. So now we have three types of trading analysis. We can do via charts and patterns, which is called as technical, and then we can do through fundamental while seeing some parameters, right? Any idea about parameters which can use for fundamentals?
Like so like intrinsic value, and then PE ratio, PB ratio, those, uncle.
Right. And even you can check the promoter holding and all those things based on
Promoter holding market cap,
market cap.
PB into PE.
And then you can check the sales and revenue and all those things also based on the fundamentals, right? And then sentimental. Sentimental, any idea about sentimental? What is sentimental
Only
analysis?
seeing the news and the newspaper hearing around. That's it.
Yeah. Yeah. And one more thing comes under sentimental, which is called as insider trading, right? So this is not legal, but some people still do it. How they do it? They have some information before the news is coming to news or news channel or newspapers. They have some persons who will inform them about the news, and based on that they will trade, right? So prior to the news coming to news channel and newspapers, they will finish their trades, so they are called as insider traders or insider trading, right? So this is not legal in India, not legal, right? So we will mostly focus on technical, and somewhat I will explain you about fundamental also, and this we should not do it. So while taking our trades, we will not follow the news until and unless it's a big news, right? It's an event like RBI repo rate cut, or it's an election, or it's a war, something like that. Then apart from that, we will not follow any other news. Only the top events or top news only we will follow, right? Like war related things. And yesterday, as you mentioned, right, you were trading during election time, right? So, so those things you have to remember actually, and should avoid to trade on these days like election, RBI repo cut. On these events, try to avoid the trades. Okay.
Okay.
Fine. Okay. Any idea about MMI, market mood index?
No.
Okay. So they are market mood index. Four market moods are there: extreme fear, greed, and extreme greed. Right. So there is a. So this is an index. I'll show you how to check this. 1 second. So go to Google and type MMI index. So then you have to go to Ticker Tape. There is a website, Ticker Tape. So here you can check the market mood index. Okay. Fine. So, so there are many traders who use this only for investing or long-term trading, right? So how they use it? So they use it. So they see whenever the market is coming near extreme free, they will start buying the stocks, and they will try to sell near this area between the greed and extreme greed, between this area, right? Because we expect that whenever there is an extreme greed parameter, the market may see some kind of correction, right? So uh, this is a one index which you can check while you want to invest for long terms, or you want to do 6 months trading or 1 year trading, like that you can plan, right? So always try to make an entry near extreme fear or here, like within this area.
So this will
And
be changing every day, Uncle, this
yes,
one?
yes, yes, yes. And try to exit near this area. This is the exit area, and this is the entry area. So in COVID, during COVID time, our market was here. So if you have invested at that time, you would have earned a good profits, because after that we have increased here till here, right? Even in October, like September 2024, the market was here. I saw that the market was here in September 2024 last year, and after that you have seen a correction, right? Around 17% of correction after that. Right? So mostly we have seen that if you check the historical data, the mostly the market, if it comes here, there will be a correction seen, right? And the correction always happen like this: 5%, 12%, 17%, 30%, 50%. The market mostly corrects in this scenario, in this ratio actually. First 5%, and then it will go to minus 12, minus 17, minus 30, and minus 50. So in COVID, it was around minus 48%, I think, 45 to 48%. Right? So these things you should remember. Okay, this clear MMI index.
Yes, sir. Yeah.
Now we will start on the candles. These are things. So there are certain parameters you should remember. Market discounts everything, and price always moves in trends. History repeats itself. We have to see the historical data, right? So here in the market, what is more important than why? Normally, if you go anywhere in any business or anything, the why parameter is more important. But in market, why is not important. What is important, right? You have to see the flag. If the stock started moving, you will take an entry. If the stock started moving down, you should take an exit, right? You should always move in a you should always enter a moving train on a platform, right? So let's say there's a platform and there are station, right? So you should always enter in the stations, on the stations. Don't try to enter in between the moving train. So similarly, stocks also you should try to enter at a platform. So I will teach you how to find that platform in the stocks using the charts. Okay. Right. So, okay. So this is technical analysis. So any idea about what is technical analysis?
Yeah, like only like full and fully only seeing the charts, uncle, without seeing any ratios, only seeing the charts and analyzing
Hmm.
the stock movement.
Okay. So technical analysis is basically a way to predict future price movements by checking the historical data and mainly the price and volume. So technical analysis focus on only two things, price and volume. So we have to see only price and volume. Apart from that, no need to see any other thing, right? So these things will work in all the markets, whether it's stocks, future options, commodity, currency, crypto. Whenever we have a price, these technical analysis will work, right? So there are certain things, tools that we have to use to do technical analysis, right? First is charts, and charts we will talk about the candlestick. We have certain patterns like hammer, doji, and there are certain more patterns, and then we have indicators also, right? So we have to see the candlestick, and then inside the candles we have to see the patterns. Why we use patterns? So that we can increase the accuracy of our trades, right? Let's say the candlestick will give you accuracy of 30%. Then if you start using patterns, they will give you accuracy of 50%. And on top of that, if you plot again the indicators, it will give you around 70 to 80% of accuracy, right? So that is why we always need some patterns and indicators on top of charts. Okay. So, have you used any kind of patterns or indicators on the charts? Have you used it
Yes,
earlier?
uncle. RSIL and then s- uh, mm, that super band something would come, uncle. Super band and then
Super trend.
yeah, super trend
Hmm.
and then a couple of more, uncle. I'm not sure because like
Okay. Fine.
and then volume oscillator
Okay. Okay.
and those.
Okay. So there are two types. Basically, there are two types of indicators: leading indicators and lagging indicators. Okay. So lagging indicators will tell you later only.